when people first start investing in real estate, they usually use their own cash, right? And then you also see these big syndicators out there who are raising millions of dollars from other people's money to take down these big apartment complexes and stuff. But how do you get from point A to point B? How do you start, or how do you go from using your own cash all the way up to raising, millions of dollars in capital from other investors? And the answer for many people is they start by raising money from their friends and family to go in on these real estate investments together. So I'm excited to talk to Vince Rodriguez today. He's the co-founder of ANV Investments. He hosts the RE Social podcast and he owns over $10 million in real estate assets. And this is what he does. This is how he has been able to scale. It's mostly through raising money through friends and family. So, Vince, welcome to the show, and I'm excited to hear about how you started raising money in the first place from your friends and family.
Yeah, hey, thanks for having me on the show, Brian. Yeah, so how I started was I kind of did what most people tell you not to do, which is like, hey, never go to your friends or family. It's all going to be a disaster. And I always thought, you know what, these guys probably haven't done much. They're just saying stuff because if you believe in something, wouldn't you want to start with your mom, to help them out? So, so I always, so me and my sister and I were pretty tight. So my sister was my first investor. So she gave me, I don't remember, like 20 grand or something. And I had 20. My buddy Drew had 20. We all put our monies together and then we bought a triplex in Bakersfield. So that's how I started. They just tested me out, just to see how we're doing. And, we moved on. Yeah, she did the first few deals. And then we had some money. So we did some deals by ourselves. But, you quickly run out of money, right? So then I had to go and get like bigger checks and give away uh, equity in my property. So for me, I like to if you're good friends with me, Brian, I would prefer that you and I buy a house than just me buying the house because it is more fun for me because when we have dinners and talk, we're like, hey, the house doing this, is that's going on. Like, oh, like I would say my sister and I are way closer now than when we started investing because we're just spending more time building stuff together, she's got a couple of daughters. So, I like to do that. So that's my interest. So that's how I started. So start with my sister, Drew's mom, coworker, and I still only do that. It's only very close circle. Yeah.
Yeah, no, that's great, and I've never heard that line of argument used before. That it's more fun to buy properties with your friends and family because then it's something that you have in common that you can talk about, over dinner or drinks or whatever. So I love that.
Yeah.
And I also, that is something that I've heard before about starting small with with each of your friends and family members when you start investing with their money, starting with small amounts from them to build trust over time. And then, are a good shepherd for their money, then they come back to you with more. But yeah, it does usually require, some time to build trust with your friends and family members, for them to entrust you with more and more of their money. So yeah, I definitely appreciate that. So tell us about how this has scaled from the beginning. As you have built a portfolio of single family, small multifamily properties. You have over 10 million of these $10 million worth of real estate now, a lot of which you have gone in on with friends and family. So how has that scaled over time?
Yeah, I'll break down the numbers for you. So when people listen, it sounds so big and they're like, wow, it's like this guy is so crazy rich. Well, so the properties are valued at like 10, 11 millions, right? But I have loans on them for about 7 million, right? So there's not $10 million of equity. Now, me personally, I only own a third of it. I only own about 30%. My sister owns the 20%, and my buddy Drew, who's my partner, right? So he owns another 20%. So just the three of us control about 70% of this, right? So that's interesting to see when you break it down. And then there's some other people who have given me money and they own the other, 30%. So that's how it's structured. But do you want me to go into detail of how I structure the deal or how I started raising the money?
Both. Let's hear both.
Okay, so I'll say let's go with the how I structure the deal so people can break it down. So for me, I'm a pretty nerd. I come from an engineering background, so real estate math is simple. Let's be honest, it's nothing. There's no there's not like quadratic equations with like different things to solve for. It's very simple. So it's like just multiplication, division, I say. So How I do the deal is if let's say there's a deal for $500,000 and I need to raise about $200,000 to do the deal, right? Everybody who gives me money will own 60% of the deal. And me and Drew or whoever I'm partnering with on the management side will keep 40%. And what I do is I work on, and everything is split 60/40. The costs and the fees are very minimal just to keep it running. The way I make money is I improve the value of the property through either appreciation or inflation, right? And then when I can eventually pull the money out, I will hand over all of the money and you will still own 60% of the property. And then after that, it's like a big, nice split. So then it's like now I have 40% of a property. But for you, you don't have any money in the deal and you're owning a majority of the deal, which is really cool. So that's my model and that's what I do. So I've been doing it for been for about 6 years now. And I've done full cycle deals, which means we bought something, we held on to it for 3 years, we sold it, or we 1031 it, or we refinanced, took the money, bought some other property. So this has been going on for a while. So now I have the credibility. So if I go to my sister, she's not asking, well, will this work? She's just saying, well, how much money do I have to give this guy, right? So that's happening right now. So in the beginning, I'll be honest, it was tough. It is hard to get money from people. And I'm always
Absolutely.
like, oh, do you want to invest in this deal? And they're like, no, you're a loser. I don't want to talk to you. Like you're asking for money, right? So it was harder to do in the beginning. So it was harder to convince people to get money because they wouldn't see the value in it. They will always think, well, why can't I just do it? But you find out over the years, they will never do it. They can't do it because it's a lot of work, right? So, in the beginning, you gotta play ball and answer the questions and come from a place of giving rather than taking. That's what I noticed in the beginning. It felt like I was asking for money. Now, if I talk to you, you could feel that it's just an opportunity for you. And I really don't care if you don't give me money because I'm going to do the deal anyway, right? It doesn't matter for me. Maybe I won't be able to do 5 deals, but I'll just do 2 deals. It doesn't matter for me. So if we either do the deal for your benefit or I don't really care. But in the beginning, I'm always trying to get a deal. So I have to try a little bit harder to do that. So it's just different now for me. Yeah.
Yeah, that makes sense. And so do you invest any of your own cash in these deals at this point, or are you purely investing with your friends and family members' capital?
I would say a majority of my the capital is raised capital, but now since I do have properties, there's equity and stuff, so I do bring in some of my equity and money if I'm doing 1031s and such. But I would say a lot of the times, most of my money goes to providing for these properties. So I would say a lot of the time during the pandemic and stuff, people didn't pay rent and the government said you don't have to. And I live in communist California, so it's like not the best. So all of those times, I've never asked my sister to give me money to pay for like the mortgages and stuff. I just cover it with my income and Drew's income. So that's where most of my money goes. And even now, I would say I'm still barely breaking even because I do have to make some payments from the all the stuff that was going on during the pandemic. But the portfolio itself is cash flowing. But because of the business, like the podcasting and stuff, everything else costs money, right? So I'm able to fund all of that because of my regular job. I make pretty decent money, right, engineer. So so that's what I would say. So most of the time I'm not putting like $100,000 down payment from my savings from my job. It's usually just to cover like capex and stuff like that, or it's equity from another property I'm rolling over. I do that a lot. Yeah.
Yeah, and that goes to show that there's a snowball effect when you invest in real estate. Your older properties appreciate and you start developing equity in those, and then you can use that equity to roll into new properties and expand your portfolio, and it all kind of builds on itself. And I love the model that you use where you refinance the properties after a few years once they've developed some equity to refund or to return your investors' capital, but they keep their ownership interest in the property. So, we refer to that as the infinite returns model,
Mhm.
where, you no longer have any money tied up in these properties as an investor, but you still own the properties, you still get the cash flow from them, which is a lot of fun. So, Vince, in 30 seconds or less, how do you help people and how can people connect with you if they want to take you up on that help?
Yeah, so I help people by either mentoring them. We do a limited mentorship if it's a good fit, and we also partner with people. But it's hard to partner with me unless I know you. I haven't taken on people I don't know. But the easiest way to connect would be is ANV Invest on Instagram, or you can email me at vince@onvinvestments.com.
Awesome. Well, Vince, thanks for joining us today. And guys, if you enjoy these quick, focused conversations that we have, please rate and review the show. It makes a world of difference to us. And on that note, we will catch you next time. Want the cash flow, appreciation, and tax benefits of real estate without becoming a landlord? You've heard of REITs and real estate crowdfunding, but you probably don't know much about 5 other ways to invest passively in real estate. So we put together a free video course for you to show you how to consistently earn 15% plus returns from 5 lesser known hands-off ways to invest in real estate. And even more importantly, we'll keep risk front and center in that whole discussion. Because really, what's the point of investing for high returns if you also take on high risk, right? So visit sparkrental.com/free to take our free course. Each video is snackable at 10 to 15 minutes long, and the entire course takes less time than watching a movie. Looking forward to chatting with you from within the course.